My name is Lisa Kimathi. I am a senior associate in the Department of Research at Standard Investment Bank, that is SIB. I will take you through the performance of the equities market in the second quarter of 2023 and partly the performance in June. So we'll start by looking at the indices. The NSE was down 5.1%, as well as the NSE 20 and NSE 25, which were down 2.9% and 8% respectively. This decline is a continuation of what we saw in the first quarter of the year and as well as last year. Most of it was in the month of April and May, but in June we actually saw a recovery. The market posted gains, so the NSE was up 3.2%, and it's why we are seeing for the quarter the returns, in as much as they were lower, they were single digits. The dips in the market are largely due to investor preference for a low risk portfolio. That is because of the risks we've been seeing generally in the global market, which is affecting our local markets ever since the pandemic. Investors are picking capital preservation over capital gains. So because of this low risk preference, you're seeing people going towards bonds, money markets and gold over equities. Also, there's a bit on inflation expectations, and investors are observing the global markets interest rate hikes, which are also informing investments towards bonds and money markets. But what we saw in June that was positive is that the Federal Reserve, that is the United States, they chose not to hike the interest rates in the month of June. And as much as 2 more hikes are expected in the year, it seemed to have been slightly more positive in the market. Actually, in the month of June, we saw foreign net inflows as opposed to the foreign net outflows that we've been seeing, and this is for the first time since February 2022. Turnover for the second quarter of 2023 was 14.4 billion Kenya shillings. This was down 68% quarter on quarter, mainly because we had low activity, as well as we came from a high base, that is in the first quarter of 2023. So in the first quarter, we had record high turnover, and this was courtesy of the Diageo Kenya transaction. But if we're to look at a like-on-like basis, we still had low trading activity in the second quarter of 2023. Partly the reasons we gave earlier on the index performance, the preference for low risk portfolios, as well as we had high activity in the fixed income market in the month of June. Turnover for the second quarter of 2023 was 14.4 billion Kenya shillings, 68% lower compared to the first quarter of 2023. Mainly because of 2 reasons. We saw low trading activity in the quarter and largely in the month of June. The month of June recorded the lowest turnover since March 2012. First is because of the reasons given earlier on the preference for low risk portfolios, as well as we saw heightened activity in the fixed income market. There are a lot of bond primaries. Second reason is the first quarter of 2023 had a record high turnover, and this is courtesy of the Diageo Kenya transaction. The top movers for that month were the usual: Safaricom, Equity Group, EABL, KCB and Cooperative Bank, and all these counters closed lower quarter on quarter, similar to what we saw with the indices. But in the month of June, we actually saw an uptick on all 5 counters. The leading gainers of the quarter were Eveready East Africa and Capturua Tea. Eveready was up 118% quarter on quarter, while Capturua was up 61%. We saw Eveready propelled by the news that it has a new strategic investor, that is Invest Africa. When it comes to the leading laggards for the quarter, that was TransCentury and Express Kenya, and both were down about 31%, also quarter on quarter. We've seen TransCentury towards the end of the quarter, that is the second half of June. They are in a receivership battle with Equity Group, which we think is the main reason that the share has come down. And this is about 2 months after they closed their rights issue. Stocks to watch out for in the next quarter. We expect half-year earnings from a number of stocks, and especially the banking sector, which we expect to release in the month of August. We're also expecting full year earnings from EABL and the energy stocks, that is Kenya Power and Kengen. We could also have full year earnings from East Africa Portland Cement. Generally, other bits we're looking out for in the next quarter is we wait to see the impact of the new Finance Act. We also keenly watching how the new CBK governor will impact monetary policy. And as always, we are watching global monetary policy action. We still see opportunity in the stock market, mainly as a long-term play. The year has been quite volatile, which has discouraged investors, but it is in this volatility that we've seen opportunity. The share prices are still fairly discounted, and we encourage investors to aim for long-term investments, particularly stocks that are offering high total return potential, and this is both dividend and capital gains return.